Everyone to stick with us versus herd. Now, I want to get your opinion on this. Now, I think that the Fed is not going to stop until they crash the market. And you may be saying, hey, we're already down a significant amount, but inflation is not down a significant amount. I mean, it came out today. Jay Powell came out and said, hey, there's not enough evidence yet for us to stop hiking rates. People are like, hey, we need immediate rate cuts right now. We're going to go into a deep recession. And Jay Powell is, I think, thinking on the other side, like, yes, you are. Yes, you are. And he said that, he doesn't anticipate that housing inflation corrects till 2023, so hopefully earlier than later, because the longer it goes, the more drawn out this is going to be. And this is the one thing that he said is that the housing market needs to correct. And he said that months and months and months ago. So if you just listen to what he says, he does exactly what he says he's going to do. I don't know why people think that, just because they lowered it instead of 75 basis points, they lowered it to 50 basis points. They're still raising rates at a record pace in history. This is not precedented. This is crazy. This is crazy, right? And people think hey, we're going to slow the hikes down. People have been pricing in a slowing of the rate hikes, we're cutting rates, and that is not the case. The rate is still going up. Okay, right now to Jerome Powell, inflation is still very, very high, even though it shows it's slowing down. Not enough evidence yet, he said, to actually take the pedal off. I mean, he wants this thing to crater, and that's when he knows he'll do his job. Now, I don't know, outside of that, but that's what he's looking at. And if we look at the price action today, and we're kind of determining where we're going to go. I mean, we had right when the news came out, we were up a little bit. This is SPY. We were up a little bit today, and then as soon as the news came out, cratered. Right, we're down almost 1% now. Had a really nice bounce. Excuse me, really nice bounce. Came back, hit 403. Back down to 398. We're trading in some wide ranges right now. I made some money on futures last night, and then I did make 30% on QQQ, shorting that. But other than that, I've been kind of staying out of the way because we don't know exactly where it's going to go. Nasdaq, I mean, same situation here. I will say with the Nasdaq, it looked like it was going to make a run to the 200-day moving average, and that did not happen. Now, not only did we not get a move to the 200-day moving average, we are now below the 100-day moving average on that. SPY actually did cross over the 200-day moving average, but now we are, after yesterday's close, yesterday got rejected here, and right now we are under the 200-day moving average. We're still above the 100-day moving average and the 50-day moving average, but the 200-day moving average, we are not. So, where are we going? Where are we going from here? I mean, we were trading in a very nice channel here, and now it looks like we're just kind of peeing between the 100-day and the 200-day moving average. We're going between basically 390 and 400. And I think there's a lot of hope in the market that we're going to start turning things around. And I think there was a lot of hope that, Jerome was going to just be kind of soft like he was a few weeks ago when he was given that, when he was talking to that college or whatever the case was. And I think people's expectation, and obviously this is my opinion, I think people's expectations are soft, right? They think we went through some hardship just because we went from 479 down to 400. Oh man, that's 20%. I mean, that's good. Dow is barely down. If we look at the Dow was barely down for the year. What was it down, 4%, 5%? Nasdaq's down pretty thick, but S&P, I mean, all these things. I mean, I think that we can go through another year of correction, and the reason why I think that is because we let things go so far for so long. We were printing stimulus throughout 2021. We had no business printing money in 2021, handing it out in 2021. 2020, sure, I get it. We had the lockdowns and stuff. I'm not going to say the word, but you know what I'm talking about. But 2021, we didn't need that. If you look at 2021, let's pull up the S&P here. We're going to go back. Let's go back the last 3 years. 2021, straight vertical. And why was it? Because the Fed was buying everything they could see, printing stimulus. There was so much extra money, liquidity in the market that they were just buying stocks. And now, I mean, we're not even, if you look at the S&P 500, I mean, we got a ways to go. We're not even testing COVID lows, and COVID lows from here would be another 50% off the 20%. You're like, oh, we're down 20%. How would you like another 50% down, right? That's not out of the question. Some stocks are testing their COVID lows or like beyond that. Like if you look at some of these stocks, like let's say DKNG, way below. I mean, this thing is looking bad. You got SoFi. I mean, terrible. I mean, 2020 was at $10. Now it's at $4. I mean, even though it is up today 5%, it doesn't even matter. I mean, it's going to take hundreds of percent. It's going to take 300, 400% to get up to like $15, right? I mean, it's just crazy. You have stocks like Apple. You have stocks like Apple, not even close to 2020 low. So not saying that we're going to go there, but there is room. There is room. Sure, could we chop around here? But I think the more that the Fed tightens and starts to reduce their balance sheet, and unemployment goes up, I mean, eventually we're gonna correct. We're gonna correct in not a good way. I'm not trying to scare you, but trying to be realistic. And now, look at this pricing today. I mean, we're back under 400 just now on SPY. I don't know where this is going to close at. We're at closing bell right now. So, I mean, just ugly. I mean, the best thing that I think you could do in this market is just stay safe. I mean, we look at Tesla. Tesla has been getting slammed, and it's been one of the stocks that's been holding up really well over the last year. And it got slammed. It's from 414 down to 156. I mean, we're down 65% right now from the highs. Down 65%. And when you're in this area, I mean, are you going to buy it? I mean, we got to find, it's got to find buyers to kind of level out here. It's at 156. 2020 low is, just look at this, $23. And, a lot of people and a lot of banks like Bank of America, JP Morgan, they're thinking 2023 is where the, shoe is going to drop. Which it could happen, sure, it could not as well, but I think everyone's just like overly optimistic, and they're ignoring the signs that, the same way that we went up, we can go down. The same catalyst, just reverse, right? Why did we go up? A lot of things were building the system. We just kept going. Now a lot of things are building the system, and we could just be going straight down for quite a while. So not here to scare you again. Just want to be realistic that this thing could get a lot uglier before it can get better. I hope that everyone stays safe. I hope everyone stays employed. I just, when you're looking out for, what the future looks like, you have to prepare for the worst. Prepare for the worst, and everything's going to be okay. If the worst doesn't happen, you're going to be over prepared. So let me know what you think in the comments. If you watch this video to the end, stay safe, stay green. It's us first heard.